Good morning, traders. Today is Tuesday, May 25th. My name is Charles, and this is the Pirate Traders live stream. All right, well, what happened yesterday in the markets? We had a push higher, okay, that created some single prints here in the A period and the B period. We left these single prints behind. Leaving single prints behind inside the day's range like this is a signal of a change in the market. Okay, so these single prints here are actually really important now because they indicate that there was a shift in the market yesterday that took us from prices down here to prices up here. Okay, we then spent the rest of the day balancing in this area, pushed higher, created a poor high. The push away from the poor high brought us back into balance, but we didn't go any lower than we didn't get into these single prints. We didn't get into this area that was the sign of change. Okay, so that's a little bit bullish there that we were able to find support just above that. Of course, that was weak support because it was one tick from the F period low. But that's not the end of the world. We can leave a weak reference behind. So we're just keeping track that it's there, but we're not worried about it. Okay. The overnight opened here at about 41.98, and I would say about 80% long, net long, okay, maybe less, 70% net long, because obviously most of the trade had to have been long in order to push the prices higher. We're set to open here in 2 minutes, and we're in a really tricky spot because we're right on yesterday's high. And of course, we get different signals and different rules to play depending on whether we're inside of yesterday's range or above. So it might be a little bit trickier morning to figure out here. It's always a bit tough when you open right at the previous day's high. The idea is if we open inside of yesterday's range, it's likely to lead to chop. The market will need to grind around down here. Okay, we'll be looking for the market to pull back and find support before it gets to this weak M period low. Repairing this would be the last sort of support that I would look for to feel bullish. If we found support here, I'd go long. If I found support anywhere inside of yesterday's range, I'd go long. Also, if we can hold the overnight low. The overnight low is exactly at the POC from yesterday. So if the market were to sell off and find support, for example, in this little node where we spent a bunch of time last night, that would be great, right? All of those things would be bullish. Essentially, finding support anywhere between the opening price and this weak M period low would be bullish, okay? If we open up, okay, well, now we're opening. So no more guessing. So we are going to open inside of yesterday's range, increasing the odds of chop. We do have that little poor high we left behind yesterday right above us. So that's going to be a very clear target. But then the question becomes, if we get up here, we repair the poor high from yesterday. Okay. Does that bring in buyers? Do we start to build support here? If so, I'd go long for a trade higher. Okay, but if we can't, again, I'd be watching the pullback. I wouldn't go short, but I'd be watching the pullback to see where it finds support within yesterday's range. Market internals, opening bullish, mildly bullish, but we got to give them a few minutes to settle in here. Okay, we did repair that poor high. I'm going to leave the high there as a reference, but I'll get rid of the poor. Okay, so now that we did that, we repaired that poor high, we're looking for the market to find support in here. There's no exact level, but just looking for it to not keep pulling down into yesterday's range, but to get back above the high and then kind of stay above to find support there. That would also be bullish. Okay, not good taper at the low here. Increasing the odds. We might need to chop back down, put in a better low. Okay, the tempo here feels a little bit like short covering. So look for a potential pullback back down towards the opening price. All right, good morning, Philip. Welcome. Good to see you, brother. Tom is here. Welcome. Diamond is back. Welcome. Good to see you. Marco is here. Element is back. Let's make some money, brother. I'm down. I'm down like Charlie Brown. Naif is here. Good to see you, brother. Welcome. Gianfranco, good morning to you. Anis, good morning to you. Jeff, welcome. Good morning. Parlin, welcome back. Good to see you, brother. Jose is back with us. Good morning to you. It's way too early to talk volume here, Element. It's only been like 3 minutes into the trading day. Let's give them some time. Rocky, good morning to you. RK Leon, good morning. Newsblit back with us. Good to see you, brother. Jamie is here. Good morning. Phoenix is back. Pavel, good morning to you. Volume building at 4209. No big deal, man. It's just the market's got to work itself out a little bit here, right? There was somebody sitting there with some shorts trying to eat the short covering rally up, and they got it, and they pushed it back down. Remember, we opened inside the previous day's range. We actually opened right on the high of yesterday. That's tricky, but we'll call that inside the previous day's range. So a little bit of chop here early in the day. The market kind of figuring itself out. That makes sense. Probably better to just give it a minute here. Look for it to find support. Like I said, it should find support somewhere in this overnight. So right now, for example, it's finding it at the overnight halfback. It'll probably pull a little bit lower. Maybe it finds it in this node of volume here. And then if not, maybe it finds support down here around the POC of today, with the lowest support being the repair of the pullback low. So that would be it gets a few ticks below this, and then it pulls back up. That would be finding support there. Getting down into these single prints from yesterday could potentially turn the market bearish because this was the change in the market, right? This is where the market said, we've changed the value of the market. It's now more valuable. Who knows why? Who knows what caused this? But that's the change. So if we get back into that area, and in particular, if we break the base of the single prints, it would be an indication that this was wrong and that the market probably needs to trade to the opposite end of Friday's range. So we don't want that to happen. So we're looking for the market to find support somewhere up in here. Okay. Looks like it already found it at yesterday's halfback. This is good taper, 3,000, almost 2,700, 190. Good taper on the low. Good place to find support, the halfback from yesterday, or from overnight. Internals remain bullish. All right, well, things are starting to look bullish here. Alex, good morning to you. Rob, good morning. Thank you for smashing that like button. As always, peoples, please, pretty please, smash that like button. Good morning to Mackie Max. Welcome back. Kwaku is with us. Good morning to you. John is back. John, don't tell us it was a misclick. It was totally on purpose. Totally on purpose. Leighton is here. Good morning to you. And Frank is back. Frank from Norway. And no, I'm not singing this early in the morning. I haven't even brewed coffee yet. You crazy human, you. All right. So, yeah, just waiting to feel like the market has good support in here. And then I'm looking for a long, unless we get below this M period low, in which case I will change my my bias. Let's see what the market has for us this morning. Element, no. Sorry, 1 second. No, I don't have any specific rule for when I start jumping into trades in the morning. Um, I just go by based on, like you say, my gut. When I see a trade present itself to me, I just take it. I just don't often get that early in the morning because there's a lot of uncertainty, right? I don't know yet what the market is going to do today. I don't know the tone. I don't know who the participants are. Are bigger players stepping in today, or is it just all, retail traders? There's a lot of things I'm unaware of, and it usually takes a half an hour to an hour in the morning before I start to be able to wrap my mind around that stuff. So I very rarely take trades in the first hour of the day, particularly if we open inside the previous day's range, right? Because that increases the odds of chop. But when we open outside the range, like let's say we had opened at where the A period high is here, and then I saw the market, so we had a gap, right? And then I saw the market pull down, find support, let's say, for example, at the POC here from the overnight. So the market opens here, it pulls down to there, it starts to find support. I might go long right then and there. And we're talking 1 minute into the market being open, because I see it as, finding support before filling the gap. So that's a gap and go. And oftentimes with gap and go scenarios, like you don't get any time to wait. It literally just, it tries to fill the gap. It doesn't. And then it fucking goes up the rest of the day. And goodbye. Like you missed it. So when those happen, I jump in the trade and I'd be ready to get out very quickly with a stop if I'm wrong. But on a day like today, where, technically we opened at yesterday's high, but we'll just call that inside yesterday's range. Like I'm going to sit back and wait and let the market work itself out, because it's more likely to have chop, Russell went vertical. Let's take a look at the Russell real quick. Oh man, you're right. That sucker's taking off to the moon on that 15-minute candle. That is, of course, bullish, the Russell being a leading indicator for the ES. But it doesn't feel like they quite found support at the halfback from overnight like we hoped. So they got to pull back a little more. Let's see where they take it. I wouldn't take this trade just because the momentum over the market over the last few days has clearly been bullish. So I wouldn't want to fight that right away. But there was a trade to be taken with the failure to get above yesterday's high, right? You push up, you pull back down, and then you were hitting resistance in here. So you could have gone short at the open price once we kind of passed back through it to the downside, and then kind of be monitoring for continuation to wherever we find support within yesterday's range. But that's not a trade I would jump in, because the trend has been higher. My assumption is it will continue. So I'm instead waiting for the pullback, waiting for the support, and then looking for a long. Yeah, designed up. Definitely wait until we have a trend intact and then jump on the trend. We'll try that one today. We might just need to balance. That is obviously always a likelihood, statistically probable that we would balance. But the overnight did well. It balanced, but it balanced to higher. It tested higher prices, and it didn't pull down below the POC from yesterday. So that's bullish. So I expect the same today, either balancing at higher prices here or trending higher. But it's still early. Market's still looking for support. Born Thor, good morning to you, sir. Welcome. No problem, Born Thor. It's my pleasure. Okay, 4 contracts at the low is weak. It's not good taper, increasing the odds the market needs to push down again. Okay, let's see if we can find support here at the 20 moving average. We're butting up against it right now. On the 15-minute candles here on the SPX. Not finding support here would be the first thing sort of changing my mind to a potential pullback today. Otherwise, everything still looks bullish. Just hasn't quite found its support yet. Oh, okay. Pushed right through that 20. Okay, we got really thin volume down here. Contracts up around half back here with only 400. I'm sorry, price levels was only 400 contracts traded. Likely the market needs to pull back up and backfill that. Next major support is the overnight low and the POC from yesterday. Yeah, on the idea of the bears targeting those single prints down there, my question is, why didn't they do it yesterday? Right? They had their chance in the M period. They pulled all the way back down to literally one tick above those single prints, and they didn't sell any lower. So, yeah, that's why I think, my assumption, until we break that level, and we can get a few ticks below the poor low here to repair it, but until we get down there, my assumption is we'll find support. And I just make that assumption because we did yesterday, right? See, we were all the way up here at these higher prices where we opened today, and it caused a massive sell-off, and we found support here. So why wouldn't we find support somewhere down here today? What's changed in the market overnight that would lead us to think this is no longer a good place to do business? Oh, ticks get negative. Oh, all the internals going bearish. Okay, one tick above the overnight low actually makes this low weak. Okay, so I can't yet tell if this was the market finding support or we just created a poor low, and so this is the push away from the poor low. We did find support right at that 20 moving average on the NASDAQ, and we have now pulled back above the 20 moving average on the SPX. So for those of you playing the home game, I still count that as support. If it's just a wick that pops below, that still counts. We'll know that this was support and not just a push away from creating the poor low if we start to see the ticks pushing higher here, getting back above the zero line. If they can't, it was just the push away from the poor low, and we still have further sell-off to find support. All right, so now my narrative is starting to feel a little bit bearish here. Just because we created those poor lows back to back right at this reference. Just has me worried. We're now one time framing lower. We're pulling, yes, the value area into yesterday's value area. It was much higher. So all of those things are an indication that the market is not ready to push higher at this point. So then when I think about the weak pullback low and the single prints that are right here, the market might need to repair it. So next support is the repair of the weak M period low, getting 2 ticks below that and then pulling back up. If that fails, the base of the single prints is a much stronger support down there. Internals turning bearish. Not quite yet in the advancers versus decliners and the breadth. They're both still above the 0 line, but they are trending down. Ticks also having a hard time trying to get back above that 0 line. So still uncertain, still feeling neutral, but it's starting to turn more bearish than bullish in my mind. Still a weak B period low because it's 1 tick from yesterday's POC. Jamie, we are 1 time framing lower. That is correct. As I mentioned last week, I'm going to put a little bit less bias on the first time frame because over the last month or two, the market has faked us out many times in the B period where it starts 1 time framing lower and then turns around and trends higher the rest of the day or vice versa. So yes, it's 1 time framing. Yes, it's on my radar. But I'm still waiting for the market to find support and assuming if it does, we can push higher. Value is still overlapping to higher, and all it would take is a big push to get the ticks back above the 0 line, and we could reverse this thing and start pushing back up. So I'm not really bearish until we get below this M period pullback low. If we start getting into these single prints, I think a short from the entry of the single prints to the base would probably be a good trade. And then we'd see if we find support there. But until then, I'm still neutral, assuming that the market is going to find support in here, yes, the same place it did yesterday, right? Like I said, that M period, if we expand out yesterday's profile, they had their chance to have a massive sell-off and fill these single prints, and they didn't. They had their chance in the overnight. They opened right here. They could have come right down and filled these. They didn't. So there's still enough bullishness in this to not be bearish yet and to just give it a chance to work itself out. And of course, there's always door C, which is the most likely door rotation, right? The market just grinds around all day. Correct. Yeah, the B period low is weak because it is 1 tick from the overnight low and 1 tick from the POC from yesterday. Yeah, design knob, if I could get you to work on the way you think about trading, um, it would probably benefit you quite a bit. So this idea of like I was a day late, a dollar short, that tells me that you're approaching trading as like a what's the word, like as a system or whatever, the wrong way. Okay, um, you shouldn't think of trades that way. You shouldn't think about it like, oh, yesterday I thought the market was going to pull back and now it's pulling back a little bit. So, like, I was early yesterday. No, no, no. Think about every trade as its own individual thing. Okay? So, yesterday, you were looking at yesterday's market. You saw something that you saw as a tradable opportunity. You took that trade. The trade went against you. You went against the trend and you didn't get the pullbacks you were looking for. So boom, lesson learned, set that trade aside. That trade now has no effect on any future trades. And your analysis in that moment has no connection to future analysis. You don't get to say, you know, if you're, I hate people that spend like a week saying the market's going to pull back, the market's going to pull back, the market's going to pull back, and every day it goes higher, and then a week later the market pulls back and they go, see, I was just early. No, 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 no. You were just wrong for a week straight, and now you're right. That's what it was. So keep each trade decision that you make, every trade you see in the market, that is a one-time, one moment, single action that you're taking based on the information that's available to you in that moment, and that one trade either goes right or wrong. That's it. Once that trade is over, once you either recognize that you were wrong in your idea and that trade is over, you never think about that trade again. That trade is out of your brain, it's gone. Now in this moment, all you're thinking about, the only thing you care about, you're not worried about losing money yesterday. That's part of trading. Yesterday was a down day. No big deal. Today will be the up day. So today you're focused on what is the market doing now. By saying something like, and I know you were just throwing it out there as a joke, being like, I'm a day late and a dollar short, but by thinking like that, you're putting a bias in your brain. You're biasing yourself to assume the market's going to pull back today because you assumed it yesterday and you didn't get it. And now you're starting to get it a little bit here in the morning. You're like creating a scenario that doesn't exist. There's no scenario right now that says this market needs to pull back. If you're fresh eyes looking at this market with just the market generated information that it's giving us right now in this moment, it could literally go one of three ways, up, down, or sideways. There's no guarantee that it's going to go down. So that feeling like I'm a day late and a dollar short, that's your bias. That's your brain fucking with you, bro. And so that's the thing to work on. Try to keep each trade in its own thing, only in the moment, and then let it go and look for the next opportunity. There is no connection between the previous trade and the next trade. And if you can learn to separate those two, it will take so much stress and anxiety and overthinking out of the process. Just always focus on what is the market doing right now and what does that tell me. Sorry to go into a straight up lecture first thing in the morning. It's all your fault, Design Knob. Yeah, also just buy low and sell high. For what it's worth, Alex, a lot of times if the morning is super boring, it means the afternoon will present more opportunities. Right? That emotional feeling that you have of like, ugh, I wish the market would do something so I could jump into a trade. Everybody's feeling that. So as soon as it starts to do something, they will jump on. Okay, well, this is good to see. We're back above the zero line on the ticks. We are still finding support on that 15 moving average on the NASDAQ, but it's currently acting as resistance on the ES. So if we're able to break back through it to the upside, that would be bullish. All right. Yeah, it does seem like that 20 moving average still acting as resistance to the upside, so that's slightly bearish. We're back to testing those lows here in the ES. Let's pop over to the NQ. The Nook. The Nook. Okay, very similar story to the ES here this morning. A little more bullish in the fact that they are still, kind of inside their overnight range and above their POC from yesterday. But still the same, one time framing lower, essentially looking for support. Value is overlapping to higher. That is bullish. The base of, or the start of the single prints. For you guys is 13,627. And the base is 13,587. So that's the potential support. Also right next to the half back from yesterday. So another great support. If we start to trade down into those single prints. Man, spending all this time grinding around this level feels bearish to me, but the internals are still supportive. Oh, we're just starting to start that trend again. But yeah, the internals still are above zero line. All but the nicey ticks. So it's still a market just looking for support, looking to bring in some more buyers. Dale, yeah, it's the look above and fail. That would have been what got you short this morning. So oftentimes if the market trades above a previous day's range and then it can't get any higher and it pulls back down into the previous day's range, it's often a good short for a trade to the opposite end of the day's range. This is where it's about to get complicated. So if you get lost here, it's okay. Because of the single prints that we left behind yesterday, this actually becomes a new day. We think about this as the day starting here in the B period at the base of the single prints. So if that was the case, you'd expect the look above and fail to pull us down to the base of the single prints, to the opposite end of the previous day, which we count as being from the change that happened in the day. Okay, don't get overly confused in that. The idea is just the look above and fail. So if the market trades above the previous day, pulls back down, you can go short at the opening price, which was right at yesterday's high for us here today. You can see that green dot. That's where we opened. So essentially you would have gone short there, then put your stop above that recently made high, right? So it would have been like market pushed up, pulls back down, you go short, and then you put your stop right there, and then you just wait and see. It would have grinded around here for about 10 minutes and then started to sell down. So that would have been a good trade. But this is one of those things where if you can trade market generated information with no bias whatsoever, that's the sort of trades you see. I didn't even see that this morning until after it happened. Those of you that were watching, I mentioned that trade, but I didn't mention it until we were like down here. When I was like, oh shit, yeah, there was also a look above and fail trade there. But I didn't see it at the time because I was biased long. Because I was so confident in this overnight trade and the fact that it found support beautifully at the POC and then just rotated, that gave me a lot of confidence, and I came in bullish this morning. So I was more focused on where's the market going to find support rather than recognizing the look above and fail. So that's just another example of how biases can make you miss things. It's better to be completely neutral going into a new day and let the market generated information give you signals. Jeff, I love your analysis here, bro. It's perfect. You're taking what it takes me like 5 minutes to explain and you're putting it in one, like, couple of little sentences. Beauty. Element, yeah, I was trading cryptos for a couple years, just as like a hobby while working, and then trading the S&P futures for about a year, again as a hobby, just doing it for like an hour or two in the morning before I'd go to work, for about a year before COVID started, and I went full time. I was just thinking about this yesterday too. It's so hard to explain when people ask that question, like how long does it take to get profitable? I really can't even tell you how long it took me, because there's like the pre-Jim Dalton time when I was like just watching YouTube videos and like reading every random book that everyone recommended. And like, I was just getting so much information from so many different sources, and I wasn't creating a good methodology with it, that I feel like I kind of wasted a few years. Like if I would have started day one of deciding to become a trader, if I would have just taken a course with Jim Dalton, I bet by now I'd be a rock star. You know what I mean? So I kind of feel like I should start my timeline with when I took that course. But then, of course, that would be ignoring, the years of reading and research and experience that I put in before that, that I can't know how much all of that affects me day to day. But everybody's on their own journey. There's people who could tell you stories of it taking them a decade to get profitable, and now they're market wizards. You know, now they make $1 million a month. So everybody's on their own journey, on their own path. Okay, the one-time framing continues here in the C period. So if the C period high can't work its way above the B period high, okay, then the one-time framing continues, and we should expect prices to push lower. We also just pulled the POC slightly lower, so that's a little bit bearish. Miles, so don't give up. You know, that's what I say. I say never give up. But we talked about this yesterday. I think for me, there just never was a choice but to keep going, because like every time I tried to quit trading, I would get antsy to like start doing it again. You know, I'd be like craving that sweet, sweet serotonin that you get when you win a trade. I think the term for it is addiction. It's an addiction. But yeah, so for me, there was no choice but to keep working until I figured it out. But if you don't think it's right for you, there's no shame in quitting and pursuing something else. It is one of the most difficult things on earth to do. All right, so we've repaired that poor low. Bringing in some tempo here. Okay, now we're more clearly seeing a sort of downtrend in the internals. Broken below that 15 moving average right there on the NASDAQ. So, yep, a pullback seems imminent. Once again, if the market gets into the single prints, I think a rotation down to the base of the single prints is likely. So that could be a good short from there to there. At this point, any short that you take, you can use the one time framing as a stop. So if you were to go short right now, you could put your stop a couple ticks above the B period high. And then just kind of each new letter that prints, keep pulling that stop down. Shri, yeah, there's a lot of people that make more than 10,000 a month. There's people who trade the full size, like the ES contracts that we all trade, the minis and the micros. Those are like a smaller version of the full size futures. There's people that trade those. Those are like 10,000 a tick. I mean, that might be, I don't know exactly what it is. Maybe it's like 1,000 a tick. I forget what the full futures contracts are. But yeah, there's people that trade those and make hundreds of thousands every single day. It is possible. Now, there are probably not too many retail traders doing that. I'm sure there's some, but those are probably people that work for institutions. Okay, so we're looking to get a couple ticks below the M period low, right? We're going to get 2 ticks to repair it and then have it pull back up into this range here. If it doesn't, that's bearish and will lead to further downside continuation, which looks like that's what the market wants. A quick thank you to all the subscribers that just subscribed this morning. Appreciate you guys. Sorry I didn't see that. I had the sound turned off on my computer. I missed it. That's great, Jason. We're happy to have you. Welcome, my friend. Thank you, Adele. Welcome. Yeah, and on the question, how do the people who trade the full size futures, how do they sleep at night? Like a baby. On a bed of money. Right. If you're trading that big of a size, for one, you're well fucking capitalized, right? You have lots of money. And two, you're experienced, right? You've been doing it for a long time and you trust your system. So those people who are like feeling stressed about every trade they get in, they're not trading like that. They're not trading those contracts. That's leveling up, right? That's like asking, somebody who's playing on a high school basketball team how they would feel if they had to play in the NBA tomorrow. It's like it's just a different thing. Different players. And no, I'm definitely not one of those. I'm a 1 to 2 contracts at a time ES trader. Like I keep it small to keep my emotions in control. Okay, worth noting that the value area is now completely inside of yesterday's value. So that is basically a signal for sideways movement for rotation, right? If it's overlapping to above, overlapping to higher, it means that you're either going to go sideways or up, and overlapping to lower means sideways or down. So there's really not any signal in it being inside the previous day's value other than the market needing rotation. On the question of yesterday's volume being a little bit low, first off, it wasn't like it was staggeringly low. It's just a little bit low. And what you want whenever the market makes a move to a new place, you want a lot of volume, because that that sort of like guarantees, right, or increases the odds, one could say, that there will be acceptance at those new higher prices. So the idea would be if the market pushed higher yesterday and it had weak volume, it had low volume, that there's not necessarily as much acceptance here. And so you could add that to your narrative today, making it just a little bit weaker. But then, like in my mind, the overnight is a signal too. The fact that they didn't pull back, that's a signal as well. So you could kind of come up with that as a counter signal immediately to the low volume. It's always just building a narrative, taking all the different things and putting them together in your mind and trying to assess what that means. Trading Donkey, what do I think about a short between here and the POC? Let me see which POC you're talking about. Yeah, I don't know which POC you're referencing. Right now, all the POCs are above us. So it would be a long trade to them. What's the price level you're looking at? Oh, going short at today's POC to target. Yeah, I mean, if we push back up to here, that's a great short, right? Because you could put your stop just above the B period, 2 ticks above the B period. So you could put it at like 4,200. And so that's all you have to risk is that right there. So that's a great trade. The only other thing I would say, though, is you getting back above. This is where the battle was fought this morning, this node of volume. So you might think if the market gets its way back above that node of volume, we're going to go rotational, right? We're going to get above that B period. So I actually think now that I'm looking at it, it's probably a better short if the market were to trade up into here and then find resistance to go short once it starts to pull back down, rather than necessarily putting a order right on the POC. That's the way I would do it. But also, to me, the more confident short would be getting below this pullback low and then not rotating back up in. The short from here down to here seems like a good one to me. But it is starting to feel like they just want to rotate today. They need to absorb these higher prices we created yesterday. Oh, yep. There you go, bro. Pointing something out I didn't even see. Yeah. And then you got the 20 as resistance above. Right. So again, for me, I wouldn't just put my short right here. I'd wait until it became resistance. And then when it starts pushing back down again, that's when I'd get into it. Because now, look, the 20 is acting as support still on the NASDAQ. It pushed below, but it was just a wick. So it is still acting as support there. So this is more like a balancing market than a trending one. Jack Berry asks if I'm ever going to do a course, and the answer is yes, sir. I'm working on it. I've already started writing the scripts, but the problem is I got to I need video footage to show while I'm talking about the things in the video. And so I need to take my old live streams and use them. But then the problem is every time I try to do that, I'm constantly like zooming in and zooming out and pushing over and moving this and doing that. So if you're trying to show, explain how a day works, for example, with one time framing, you play it through very quickly, right? You play 3 hours in 10 seconds and all of a sudden it's just the charts flying all over the place. So I'm trying to force myself on days where the market's doing something to kind of just let the screen sit for a while and just record time lapse of the market, if that makes sense. So yeah, I'm working on the videos. They're coming very soon. They will be worth the wait, I promise. The idea is I want to take all the concepts that I discuss and make a 2 to 5 minute video on each one that you would only, I don't want people to keep watching this live stream to try to learn the market profile. I'd prefer if they watch those little 2-minute videos 5 times over until it really sinks in and then come to the live streams, so that this is a place where we can all discuss things we're seeing in the profile, instead of just me teaching all day, every day. Like Donkey just pointing out to me that as we get to this POC, we're also butting up against this 20 moving average. I would love it if the chat could start showing me things I'm missing and supporting my analysis, So we have to get everyone in the chat to a base knowledge so that we can start to do that. So yes. Sorry, guys, stepped away for a second. Let me jump over here to the NQ. Okay, so yep, that is the cessation of one time framing in the NQ, increasing the odds of rotation. They beautifully found support right here in this node of volume from yesterday. Technically, it could be weak, but I've got this in 2-tick increments. Yeah. Good taper on the low. So it looks like a good low to me. Stayed above the overnight low. That's bullish. So yeah, the NQ is in rotation. Also, it found support on its 20 moving average, so that is more bullish than the ES. Value area is overlapping to higher. That's slightly bullish. So yeah, things look good on the NQ. ES, still the value area is engulfed inside of yesterday's value. We are still one time framing lower, although we print the D period here in a minute. So we'll see if that will get above the C period low, which would be the cessation of one time framing. Yeah, the internals look like a rotational day to me. Adam, rotational means that the market is just going to go up and down and up and down and not necessarily pick one direction and move in that direction for the rest of the day, which is what we call a trend. So let's say, for example, the D period pushes its way up here and it gets 2 ticks. Let me zoom in a hair here. It gets 2 ticks above the C period high. So it gets to about 41.9975. Okay. That is the cessation of one time framing, meaning we're not making lower highs anymore. And so that means the market will likely go rotational. So it'll probably push up to here, somewhere in here, and then it'll find resistance and it'll push back down to where you see these green letters. That's the point of control. The point of control is the place where the market has spent the most time throughout the day. And it is common that the market will trade above it and then pull back to it, and then trade below it and pull back to it over and over again when the market goes rotational. Okay, we're not there yet. We're still one time framing here on the ES. So, you know, we'll wait. Looks like your short is working out there, donkey. Maybe move that stop up. So yeah, right now we are still one time framing. We're not rotational yet. I'm just saying that it feels like it's going to be rotational. Great question, Aaron. That is the 20 moving average, and it's on the 15-minute candles. And the reason I use the SPX for that is that you only want to calculate it using the regular trading hours. So you can use the futures contract if you have it set up to only include regular trading hours, or you can use either the SPX or the SPY because they only trade during the trading hours. It's going to be the simple moving average, I think is what it's called. Yep, simple moving average. All right, so there is the push down below that weekend period low, repairing it. So we're looking for the market to find support here and push back up. If it doesn't, the short to the base of the single prints seems like a good trade. Okay, finally pulled those the breadth down below the zero line, which is bearish as well. Also worth noting that pulled value to being overlapping to lower. So overlapping to lower value means that the odds that the market will either go sideways or down. Okay. Yeah, element. This is not rotation yet. You have to get, sorry if I confused you. You have to get the cessation of one time framing first. So this is just a continuation of the trend lower. It's just not a very strong trend, but there is a trend going lower. And now that we're in the single prints, yeah, to my mind, we need to find support, which we just aren't finding in here. So it probably will find it at the base of the single prints at 41.85. Okay. Martin, will S&P keep dropping? Well, of course, I don't know. I have no idea. No crystal ball here. But yeah, the market generated information signals that that's probably what it wants to do, right? The internals are bearish. The breadth and the advanced reverse decliners are trending down, and they're below the zero line. So that's just straight up bearish. Okay. The ticks, they look more like rotation, but we did just have that big tick that pulled us lower. So we might expect to have some more ticks that start to build to the downside here. So you got sort of bearish to neutral signals on the internals. You got reasonable, you got good taper on the low. Okay. But once we broke into these single prints, we have to start to ask ourselves the question of what does that mean in terms of buyers and sellers, right? Yesterday, expand the profile out. Yesterday, the buyers were happy to come in and buy here at the M period low, but today they weren't. We had to pull it a little bit lower. So that trend might continue, right? And we need to keep pulling it lower until we bring in a lot of buyers at this lower level. So it's truly tough to know, honestly. I trust the one time framing at this point, and I will wait for the cessation before making an assumption that we are out of the downtrend. Trading donkey. Should you stay in your short? I think you should. It's so hard, man. The market's being annoying this morning. It won't give us a clear signal. It is trending down, and looking at these internals, you would think the price was falling like a brick, but it's just going nowhere. So I do still think the market does have to come down here and find support at the base of the single prints. So I would stick with it, but it's just like, it's so bizarre how the internals are so bearish, but the market itself isn't moving. So that is a signal that once it finds support, whether it's here at the halfback or it pulls down to the base of the single prints, that once it finds support, it will likely rotate back up to the POC. But yeah, it's just very lackluster and it's pushed down. These bears don't have much tempo, much emotion in the way that they're selling. There we go. We're starting to get a little push. But yeah, strange day for sure. Jack Berry, how do you know if an uptrend or downtrend is, or how long it's to last? Yeah, you never know. Trends can last a period of minutes. They can last hours. They can last days. There are also trends happening on different time frames, right? There are longer term trends and then there are shorter term trends. So like right now, the intraday trend is down, but the overall market trend is up, right? So it's like there's trends happening all over the show. And it just depends what you trade and what your time frame is for trading. Okay. So once again, I think we find support at the base of the single prints. If we don't, probably this node of volume or the opening price of yesterday, where this node of volume is from Friday, somewhere in there or there, becomes the next support. But I think we'll find it here at the base of the single prints. Two minutes from printing the E period. The E period would have to work its way all the way up to the top of the D period and get 2 ticks above it to cause the cessation of one time framing. Otherwise, we assume the trend will continue. Yeah, Bornthor, I don't have a good strategy for that, for taking profits. I always set a target. So as soon as I enter a trade, so say I go short right here, I'll put my stop loss, right? So say maybe above the POC from yesterday, put my stop there, and then I put my take profit down there, and then I sit and I watch the trade. A lot of times, once the trade has gone in my direction a little bit, and I feel like I'm safe, I'll then pull my stop a tick below the break even so that I can't lose any money on the trade, right? Getting a tick below, it covers the fees as well. So you get 1 tick below. And then what I'll do is, if I'm really confident, like if I'm absolutely certain we're going to come down to these single prints, I'll just leave it and I'll let the market come and fill the take profit order down here. But if I'm nervous, if I'm uncertain about it, I'll just trail my stop. Not like using a trailing stop, just myself. I'll grab it and drag it down a few ticks. Then we push a few ticks lower. I'll drag it down a few more ticks, like that. Okay, there is the E period. The printing of the E period has left us some single prints here in the D period. Those are likely to get backfilled at some point. I use AMP futures to trade, and then I use TradingView as the platform that I enter and exit my trades on. Thank you for pointing it out, Design Knob. Yeah, 150 people. We're crushing it today. That's probably the most I've ever had at one time. Welcome, everyone. If you're new, you probably think you're looking at the Matrix right now. That must be tough. Feel free to ask questions. All right, so now we're trading our way down to that base of the single prints. So we're looking for support to start to step in somewhere right around here. It doesn't have to be right at that level, but pretty close. Bearishness in the internals remains. Has Donkey been neglecting the Discord group? Bad Donkey. All right, well, wow, that did not act as support at all. Man, I'm so glad I monitored one contract for continuation. All right, so we found no support at the base of the single prints there. So potential support around this 4179 level where we had a little volume yesterday, or more likely at yesterday's low where we had volume from Friday. Still have those single prints above from the D period that need to be backfilled. No, the POC didn't move. The POC is based on time, so the market would have to spend a few hours down here now in order to pull the POC down here. Okay, so that actually might have just been some stops. They were trying to catch some of those stops on the long side. Okay, this might be the very beginning of buyers starting to step in as we put in some volume down here. The ticks are trying to get themselves out of this downtrend of lower highs that we've been creating. So if we can get that tick, that big green tick that just breaks through this resistance that we see here, where we're creating the lower highs, if we can just get that one big green tick, that would be the beginning of buyers stepping in here. If not, assume the downtrend will continue. Jack Barry, thank you for the donation, brother. 706, I appreciate you. All right, so yeah, maybe this is some buyers starting to step in here as we start to see these little pink candles forming over here on the left. Still haven't broken that downtrend in the ticks just yet, but maybe. Still got these single prints above us, so there'd be nothing unusual about the market trading up to refill these single prints in the D period and then turning around and taking another push lower. Design knob, them's fighting words, bro. Don't get me started. Marco, would I fight the one time framing and buy the dip? I would not. The reason I would not, one of the main reasons is the single prints here in the D period. These are like a giant magnet to pull price back up to the base of the single prints, which is the C period low here. But then once it gets there, that magnet turns off, right? It stops pulling on them. And so if there is a bearish trend intact, which it will still be there, because we'd have to get all the way up to here, to the D period high in order to get the cessation, that just increases the odds that the market will push lower. So I'm not going to jump into a long when the odds are against me. I'd have to wait until the market traded above the D period high, and then that's the cessation of one time framing. Then it pulls back down below the POC. Then I could go long. That's now that the market has trended lower, the only thing that's going to get me long is getting the cessation of one time framing, pulling below the POC, and then finding support. So the long and short of it is, right now I'm looking for short trades, not long trades. Raj, I use the Lite, the Window Trader Lite software. The blue has a lot more functions and a lot more features, but I don't really find it has anything that I personally need for my trading. But yeah, I think the Lite is got everything that you need. You could always start with the Lite and then switch later as well. And just for the record, I don't give official recommendations. Like as a channel, I don't recommend Window Trader. It's just what I use. I've tried some other ones and I prefer the Window Trader. It has more, you have more control. You can pretty much make it look any way you want it to look and function any way you want it to function. So that's what I like about it. The software for the Lite software, it's like 150 a month, and the data is like 130, I think, or maybe vice versa. I think I pay about 300 in total. Hater. Thank you for the subscription, brother. Welcome. Trading donkey. Are you calculating expenses in Doge now? Doge or nothing. Yep, we're doing battle right here above that base of the single prints. Buyers versus sellers. Who's going to be more powerful? Who's going to break out? Still waiting to see that one green tick that breaks above these highs. Okay, well, I'm still not impressed with the buyers here in terms of looking at the ticks. I'm not blown away by what I'm seeing. It could be the beginning of the reversal, but we're not quite there yet. I guess on the NASDAQ it is. NASDAQ's been stronger than the ES all day. But what I am thinking is in 2 minutes, we print the F period. And all the F period has to do is get 2 ticks above the E period in order to get the cessation of one time framing. So if the E period can't repair these single prints in the next minute or so and then start pushing lower, odds are we'll get the cessation right here in the F period. That will make us rotational, which will change myself from just looking for shorts to looking in both directions. And my assumption will be continued rotation to the POC. It makes sense, right? We had all this excess we created yesterday in the market. Now we need to spend some time balancing it off. We balanced it during the second half of yesterday, up at higher prices. We balanced it overnight, up at higher prices. We dipped below, but didn't fail all the way down into the excess we created. And now we're balancing, and look at where the POC is. Right next to the POC from yesterday. So it's an indication of just further rotation, further balance. So once again, I'm front running as I did earlier today, but that could happen in 1 minute. So I'm just giving you a heads up. Okay, so we got the cessation of one time framing at the exact moment we backfilled those single prints. Now the day is likely to go rotational. So what am I looking at in a rotational market? Oh, yep, we broke it with the ticks. There you go. Okay, so that was the signal I needed to say that the base of the single prints is going to act as support here today. This was just a hunt for stops below. Okay, and it literally, if you remember when it happened literally in like 2 minutes. We barely poked below there. So now I'm assuming rotation. I'll be looking to go long below the POC and short above it. I prefer to trade outside the value area. So as the market trades its way back up to the POC, we'll likely pull the value area a little bit higher up here. And then if the market continues to trade through the POC higher, I'll be looking for a short once we get above value. And same thing to the downside. If we trade back down here to the lows, I'll be looking for the market to find support here, and then I'll be going long with the trade. Okay. So above the POC, above this green line, you look for resistance and then go short. Below, you look for support and then go long. Also waiting to see how the market reacts to the 20 moving averages when we get back to them. Oftentimes, once you trade through it to the downside, it becomes resistance on the upside. If it's a true rotational day, it won't be resistance. We'll just keep passing right through it. So that's another signal to keep an eye on. Slade, I'm so happy to hear it, brother. That's what I'm here for. Thank you for the heads up. Thank you for the sub, Patrick. Good to have you. Welcome. Yeah, Trading Donkey. That's a good insight. I will just actually hold on 1 second. Sorry, guys. Sorry about that. Girlfriend's working from home today, so she's on a conference call in the other room. Yeah, so on the cessation of one-time framing, yes, I get what you're saying about that feeling, but I also have felt like it was supposed to be a rotational day all day. Like I was trusting the one-time framing. I was trusting the market-generated information. It said we were trending down. I got with the trend. But once this happened, we had that little stop run down below the base of the single prints, and then we couldn't get back below it again. We were just grinding here. Every spidey sense that I have was saying we're going to go rotational. We're going to go rotational. So when I see it, I trust it. I trust that spidey sense that this was good support down here. And also on the idea of the 1 tick to 2 tick thing, I've been keeping track of it, and I do find that using the 1 tick increments is working great. There has been, you're bringing up one, there have been 1 or 2 times where it maybe would have been better if I was in 2 tick increments, but I'm liking the 1 tick. It's working for me, even with the volatility. So I'm sticking to it. But it's a good, I like Trading Donkey that you're thinking like this, that you're asking these questions, that you're trying to create your own understanding of these things. That's wonderful. Keep doing that. So for anybody that's just joining us, the market is rotational. It's rotational. So we're basically looking for the market to get above the POC here and then find resistance. And we would expect that it would rotate back. And same thing below. If it pulls below the POC here, it would find support and then rotate back. At this point, if you're looking for where does the market break out of rotation and potentially trend one direction or another, you can literally just use these 2 white lines. So the high of yesterday, if we're able to work our way back up to that high and we don't meet resistance there for the rotation, then expect a breakout for further upside continuation. And then same thing with the base of these single prints. If we trade back down to here, we don't find support around this little node of volume above the single prints here, expect further downside continuation. Anything in between these 2 white lines, okay, so the high being about 42.06 and the low being about 41.85, okay, anything in between there, the market is likely to just rotate. So no reason to get overly excited or overly anxious or assume we're going to have some crazy up move or down move. If it pushes up here, anywhere above value, it's likely to find resistance and then pull back down. And anywhere down here, it's likely to find support and push back up. And it'll just keep doing it all day. So just want to give people a heads up. That's what to watch for. And then again, the last thing that's worth keeping an eye on is these moving averages, the 20 moving average on the 15-minute candles. If the market just kind of pushes right through that, no problem. It's further sign of rotation. Okay? If it finds resistance, we might start another leg of pushing down, but I would expect to find support and rotate back up. Hit me with your cues in the chat. John, if you're talking about the E period low, yeah, that was just hunting for stops. But if you're talking about the entire pullback as a whole, no, I don't see it as that kind of thing. I see it. Okay, so as we traded our way up here towards the POC, we pulled it a tick lower, or did we? Yep, we pulled it lower from where it was in the D period. Okay, bringing it even closer to the POC from yesterday. But yeah, see, so that's this right here, this node of volume that you're looking at just above the POC being right up against the node of volume from yesterday. That's a signal to me that we just weren't ready to keep going higher, right? We created excess. Excess leads to balance. It turns out spending the afternoon balancing and the overnight balancing just wasn't enough. So we had to pull back in price to find the support, and now we're back to balancing. So, yeah, I don't see this as bearish at all on a longer term basis. I see it as just rotation, just absorbing this push higher that we had on Monday. Rocky, I do still have that account. Actually, thank you for reminding me. I need to go turn off the data feeds for that. I'm paying for that every month now. Um, but no, I never found a way with Tradeovate to make the market profile look in a way that I liked. I played with it. I tried changing all the settings, and I just didn't like it. I didn't like the way it looked. So I kind of just gave up on that project. So unfortunately, I've got nothing to share with you on that. Um, but I've talked about on this channel before, I even just tried changing the colors of the letters in these TPOs. Like I try to change them to just be all white because I don't look at the colors of the letters. I'm just looking at the colors of the volume. So I tried changing them to white, and even that was like too much for me. It was too much change. I didn't like it. So that's just me. Thank you for the sub, Nor Trading. Welcome to the community. Is this one you're talking about, Design Knob? This TAS market profile? Yeah, if anybody tries these out or makes their own of these and wants to send me a link to try it out on Tradeovate and take a look at it, I'd be happy to do that. I've never tried using these community indicators before, but I'd be down like Charlie Brown. Okay, so we're right up against that 20 moving average. Does that work as resistance? So once again, if we push through this 20 moving average on the upside and we get above the value area, which right now the high of the value is at 41.9950, I'll be looking for resistance to go short for a rotation back to the POC. Yeah, keep me posted on that, Design Knob and Rocky. If you guys find something good, one of those indicators that you think works great, shoot me a message on, DM me on the Twitter or Instagram or Facebook and let me know, and I'll check it out and then maybe share it with the community or the Discord, wherever you want to get in touch with me. Big Bull. Thanks for the sub, my friend. Welcome. Sounds like you're in the right place. Big Bull. Either you're a trader or, well, I won't say. Or you breed bulls. You could be a bull breeder. No, Element. I don't see it as a dead cat bounce. It's always possible. I could be wrong, but I just see it as rotation. The market found support at the lower level, and now it just is doing two-sided trade. So it'll keep pushing up and down until it's ready to break out, either to the upside, getting above yesterday's high, or a breakout to the downside, getting below that base of single prints. I mean, Element, that seems like a silly question. In a hypothetical world, if it was a dead cat bounce, what would it mean? It would mean the price is going to fall lower, but that's not the world we live in. So I wouldn't worry about it. Um, take the market that's in front of you. Right now, the market that's in front of you is rotating. Right? It's not saying it needs to go lower. It's not saying it needs to go higher. It's just saying it needs to bounce around. If you're trying to make money between now and the closing bell of today, you'll probably make it trading that way, assuming it's going to go up and find resistance and then rotate back, and then go down and find support and rotate back. Hung too. Thanks for the sub. Welcome. Creating a little a little weak high here on the G period high and the G period low, both weak. Thank you for the heads up, Raj. I will check that one out. Ivavlo, welcome. Thanks for the sub. Happy to have you. Thank you for the heads up, Phoenix. Yeah, the Discord link is officially closed, guys. Not adding anybody new right now. Getting ready to launch a paid service at some point here in the future, the very near future, and you're going to have to pay for it. So sorry, nobody else gets in for free. But look out for that paid service. It's on its way. Yeah, Element. Trading Donkey kind of answered your question here, but I'll just go into further details. So there's two different ways that a market can move throughout a day. Okay? The one way is it can trend, which is where it consistently moves in one direction. The other way that it moves is rotational, meaning it goes up and down and up and down, and it just grinds around. Okay? I can't tell you exactly how often the market does one or the other, but you should learn a trading system. You should create a trading system for yourself for both markets, because it's very, very rare that you get a trend day where it's trending all day long. Most of the time when it only trends for a few hours and then it rotates. So if you have no strategy for trading the rotation, meaning trading when there is no trend, then you're going to be spending half your time just sitting on your hands doing nothing. So there's a million different strategies for trading rotational days. There's a million different tools. You could look at the market profile. You could look at the VWAP. You could look at tons of different things. Okay, Bollinger Bands work great on rotation. There's a ton of different tools. You just got to figure out which one works best for you. But it's good to have a strategy for when the market goes rotational, because it does all the time. I mean, almost every day. So you want to be able to trade this. You don't want to, so for me, once I get that cessation of one time framing down here in the F period, that's it. I already have my plan for the rest of the day. There's no more thinking. There is the only thinking I have to do is I have what's it called? A notification that pops up when we get above value area. I put that in on TradingView, blink, it makes a little noise. And then boom, my eyes come over to the chart and I start watching for resistance. That's it. I have nothing else to think about now. I've spent zero energy worrying about trades since we went rotational right here, because I know my rotational strategy, buy above value. Sell above value or buy below. I can't do anything until we get to there or there. So that's just my strategy. It's just the way I choose to trade. And so that's what works for me. You've got to figure out one that works for you. That's essentially the idea. Miles, this is why I didn't want to bring it up. I'm not ready to talk about it yet. It's just not ready. But I'm not giving access to the Discord anymore because that is coming. But I promise you, I will give you all the info once I'm ready. John, same question. Yeah, not talking about the paid service right now. Wasn't ready to announce it. Wasn't ready to talk about it. but just had a bunch of people asking about the Discord, so I just wanted to clear that up. No more entries into the Discord. It's closed to the public. Element, I think that's an awesome idea, right? So if you want to know my rotational trading strategy and you just want to try it out for a day, right? You don't see any trades to take with your trend strategy today. Great. Open up a paper account and give it a try for the rest of today. If the market gets above the blue square, look for resistance. Look for where it can't push any higher and then go short and just put your take profit right there on that green line on the POC. And then do the same thing if it gets below value down here. Go long and put your target right there and just be patient. That's the thing that's tough about rotational days is they grind and they're like tricky. They never reverse at exactly the spot you think they're going to reverse. So you have to just kind of enter your trade and be patient and wait for it to work its way back to that POC, which it always does. Okay. Or not always, but you know what I mean. Most of the time. You son of a bitch, John. No. Yeah, that's true. Do we have a function in the Discord where if somebody is like annoying you, you can block just them like you can with the YouTube comments? Because if that's the case, free speech. Let it run mad. Let it run crazy. I'm just kidding. Be nice. Be nice to one another. Well, there you go. So if anybody's mean to you in the Discord, just block them. Good call, Rob. I will look into that in the future, brother. Thank you. All right, so the market's pulling back here a little bit. Still feels rotational. So look for support and then a push back to the POC. All right, so we are below value on a rotational day, and we're looking for support and then a push back to the POC. They're at 41.96. If we do not find support and we continue to sell off, getting below the low that we created here in the E period would be very bearish for further downside continuation. Anything inside of here, particularly, I would say above the, say, 41.84 level, should find support and then rotate back up. Yeah, John Doe, I use AMP Futures as my broker. Sorry, guys, just digging through some of these comments in the chat here. I'm seeing one from Andy. Is AMP better than Thinkorswim? And that's really, it's a personal choice. You know what I mean? Thinkorswim, the thing with TD Ameritrade is they have much better customer service, and like they streamline everything and make it a lot easier. But then they also have like higher margins and higher fees. So if it's more important to you, like, you know, if something goes wrong, you want to be able to jump on the phone and 2 seconds later have a customer service person who's going to help you through it. Like if that's more your speed, Thinkorswim is probably the best choice. But if you're the type of person who you're pretty comfortable, if something goes wrong, you can work your way through it yourself. Because AMP doesn't have very good customer service. Like they do have phone and like email support, but they're just slow about it. So that's kind of the way I feel about that. But for me, it was more about just the margin size and the fees. Back when I used to trade on Thinkorswim, trade futures, I was trading micros and I was having to pay like $5 in fees for each round trip, and it was insane to me. So they don't do that anymore. I think they've lowered it a lot since then, but back then that's what they used to charge. So I was like, peace out. I do still use Thinkorswim though when I trade options, which I don't do that often, but when I do, I use Thinkorswim. Yeah, see, this is a great example from Olorin. I don't know how to say that name. Yeah, that's the type of thing I'm talking about. If something goes wrong and you're using AMP, you're kind of on your own. They're not going to be super helpful about it. But if you're using Thinkorswim, they'll take really, really good care of you. Their customer service is fantastic. So it just depends, you know, what's more important to you. Are you willing to risk the bad customer service to get the cheaper fees, or would you rather pay the higher fees and get the good customer service? Oh, Loren. Cool. Thanks, dude. Okay, just glancing back at the market here and seeing that it's still finding resistance on the 20 moving average on both indices, which is interesting to me. Normally on a rotational day, you just kind of push up and down through that, and it doesn't really work as much support or resistance. We got the pull down below value here in the H period, and we're attempting the rotation back up to the POC, but we haven't quite made it to there. So that might mean we're setting up for another rotation down if we can't get through this 15 moving average. So let's keep an eye on that. My pleasure, Anis. Happy to do that. An element. Yeah, keep playing with it, dude. Because it sounds overly simple the way I'm saying it. Just go long below value, take profits at the POC, go short above value, take profit. It sounds so simple, but then the more and more you do it, you'll find ways to hone the strategy within that. Like if you dip below the value area, you pull back in, you start to trail your stop on the way up. Like that's, for example, one way that gives you slightly better odds, and so on and so forth. So before you start trading it with your real money, just play with it and see what works for you. Okay, still got that 1 week reference above, the week G period high. Actually, the H period high is also weak because it's 1 tick from the A. Man, couldn't jump on fast enough. I was just going to say, we cheated by pulling the POC down to the I period high, so we did get the rotation back to the POC. But then that resistance from that 20 moving average remains. So it looks like we have another push lower. So once again, same MO as before. I'm looking for the market to find support somewhere below value, but above the low of the day. If it can do that, I will go long with that trade back to the POC. And these weak references above, they're not resistance. They're like magnets that pull price to them. So weak references, when you start to build them up, one weak reference by itself doesn't really mean much. But when you start to have 2, 3, 4 of them, they significantly increase the odds that the market will trade back and at least repair the first of them. So the G period by itself, not that big of a deal. We don't have to come up here and get it. But now that we've got an H and an I high that are weak, it really increases the odds that at some point the market trades its way back up to repair those. But they are not resistance once it gets there. They just need to get repaired and then they disappear. No, I don't trade gold. Nowadays, I pretty much just trade the S&P. Uh, Jonathan, I'm not sure what you mean by a strikeout rule, but my guess is you're asking if I were to lose a certain number of trades, do I call it a day? And the answer is absolutely. Usually it's three. If I have three trades in a row, particularly like I'll give myself a break if I take a trade in the morning and it goes against me, and then a couple in the afternoon. But like if I take three trades in a row and all three I lose money or break even on, I walk away from the market at least for a few hours. Before I used to live stream, I'd just go for a walk around my neighborhood, literally physically just go for a walk. Um, that's the most effective strategy I find. Once you get into that cycle of losing trade after trade after trade, you get into what we call revenge trading, which is where your motivation for getting into trades is being affected by your psychological desire to make back the money you've lost, as opposed to seeing opportunities in the market. And your brain has this thing. It's not cognitive dissonance. What is the term for the thing? I can't remember, where it has the ability to trick you into thinking you're seeing opportunities in the market, but it's not. It's making them up out of thin air to try to solve what the one thing that your subconscious is dealing with right now, which is obviously like you're angry about losing money. So your subconscious is going, we got to find a way to make some money. We got to solve this problem. He's freaking out because he's lost all his money today. And so it will just start throwing opportunities at your conscious mind, like get into a long here, do this, do that. And they're not actually based on analysis. They're based on emotion. And so, yeah, I have a rule where three trades in a row go against me, I walk away, even if only for a few hours. It lets my brain reset, and then I come back to the market fresh. That's another great one, NOR. Yeah, taking a cold shower, that'll reset the brain quick. I do that every morning. I mean, I would argue that revenge trading back to break even's about as good as it gets, because normally revenge trading leads not only to more losses, but much larger losses. Like when people start to revenge trade, they take on larger positions. I know I'm guilty of it. I might be trading the MES during the day. A couple of trades go against me. I start getting frustrated. And then I'm like, oh, I see a great trade. Not only am I going to jump into it, I'm going to go on the full ES contract for this one. And then I get roasted. So, yeah, revenge trading, always a bad idea. There you go, Aaron. The chat's got my back. Just making sure you see it. Yeah, I don't like talking about my trades. I used to do that, but it affects my ability to trade. I'm not as good at staying in positions that are going against me if the whole world is watching. So I make more money when I don't share the trades. That being said, market is working its way below value, or it's almost below value on a rotational day. So I'm looking for some support. Okay, so as always, I'm looking for those trends in the ticks. I'm seeing higher lows here. So as long as that trend remains, I would assume the market's going to rotate back up into value. If we're going to have any more major selling to the downside, I suspect we'll break this trend up that we have here with the ticks and get that red tick pulling down. Donkey, why are you giving away my feet pics? That's the big announcement. My little tootsies are going to be on display. You're ruining it. All right, they're right on the bottom of that trend. Are they going to break it? That J period low is weak. It's a weak J-Lo. We did it, everyone. Yeah, I don't think there's anything fundamentally wrong with, if there's some online guru that you're following to want to actually see them trade live in order to prove that what they're promoting to you is real. I just don't personally feel any need to do that on this channel. If you question my ability to read markets, just go back, grab any video from the past, scan through it very quickly, and just watch what's happening on the bottom of the screen. I guarantee you if it's green, the price goes up. If it's red, the price goes down. If it's gray, the price just rotates. My consistency with that is pretty fucking good. Like, it's impressive. When I go back and look through all my old videos, it's very rare I get the general tone of the market wrong. It does happen, but it's just not that common. So if you're wondering whether I'm full of shit or for real, just watch those. Watch the bottom of the screen. Yeah, so element, once again, during a rotational day, or when a day goes rotational, none of that really matters anymore. It can make lower lows, it can make higher lows, it can do anything. And as long as it stays inside this range, right, that we talked about earlier, it'll just keep bouncing. It might grind a little bit here and then pull back. It might push way up and pull back. It might only go up a little bit and pull back, but it'll just keep rotating. So until you get the breakout, until you get below that E period low, just assume it'll find support and rotate again. It does feel like they're building up a little bit of bearish momentum here, but it's not like clear. It's not like a clean downtrend type of thing. It's just there are more sellers than buyers, but only a tiny bit more. So one should hope at some point when it pulls down somewhere in here, somewhere in these single prints of the E period, and it finds good support, it brings in those buyers. Then the buyers outweigh the sellers, and we're back to the POC. You know me. Rocky, you have gotten to the crux of the annoying thing about the ticks. The trends in the ticks are a nightmare to read most of the time. The wicks will just confuse the living shit out of you. So I don't really have a good system for it. And like today, there is no trend. Clearly, they're just all over the place. But I generally try to look for if you look over here at yesterday's ticks, you can kind of see there's a trend of higher highs, right? It's not perfect. You have a few little wicks that poke above it. And it seems like it's faking out right here, right? At the very end. But it's still there. You can still see that you're making higher highs. So yeah, it's not the easiest thing in the world to read the ticks. But if it were easy, everyone would be doing it. Jonathan, good day. I know, dude. We're growing, brother. A little bit at a time. Dr. Vijay, that's a great question. Because on a rotational day, sure, in this particular instance, you happen to get lucky, and shorting the POC at the H period would have gotten you profits, and at the I period would have gotten you profits. But you know what else you get all the time? The G period, right? You get this all the time, where you get up to the POC, it starts to pull down, and it just goes freaking nowhere. And then what you get is, you didn't get it here today, so it's not a good example, but it goes nowhere, and then the next one pushes way higher. So if you tried to short the POC, you don't get profits. Once it passes back through the POC, you're screwed. You have to just sit in the trade, or take a loss, obviously. But if you don't want to take a loss, you have to sit in the trade, wait for it to go all the way up, wait for it to pull all the way down, just so you can get out break even. So you don't ever want to put yourself in that position where you're stuck. So it's much safer, instead of trying to go short on the G period, to wait for the G period to pull down and then go long, right? So in this case, there would have been no trade here in the G period. But then the H period came down and it got below value. So if you waited for that, went long down here, you got the rotation back up. So instead of making your money from the G down to the bottom of the H, you're making your money from the bottom of the H back up to the POC, to the I. Does that make sense? So it's just a matter of likelihood of the trade working in your favor. Trying to short at a POC, there's very little probability that you're going to be right. Whereas trying to go long below value, very high probability you're going to be right. Same profits for both trades. Probably better to take the high probability trade. Jonathan Rains? No, Jim Dalton definitely does not say that. Jim Dalton loves a rotational day. His strategy for trading them is insane. He would have recognized that we were, the prices were too high in the A period, and he would have put on a put. He would have bought a put, and then down here he would have bought a call to hedge the put. Then up here, he would have taken profits on the call and added another put. The way that guy trades is just fucking nuts. But yeah, he loves a rotational day. Jeff P., you're becoming one of my favorite commenters in the chat. Our brains think alike, my friend. So the question on do you go long right now? The long would have been below value. It would have been down here, in my opinion. But to each person their own, right? If you go long here, you've still got quite a distance to get back up to the POC. But before you enter, you have to ask yourself this question. Is the market finding support? Does it feel like we're done pushing down and we're ready to start pushing up? If so, you enter the trade and then you ask yourself, where do I put my stop? Right? Where do I know I'm wrong? So maybe like if I were to enter right now long, I might put my stop just below the, a couple ticks below the H period low. Right? So my assumption is if the market trades back down below that low, it might need to go a bit further before it finds the support. So you can enter at any time you want on a rotational day. Just know what you're stepping into. Have you already found support and you're on the rotation back up, or are you still looking for support? And then once you enter, where do you exit? Where do you realize you're wrong? If you can live with losing the money from here, so you'd be stopped out right now. If you could handle losing that money from there to the stop, great, take the trade. If not, wait until the support is more certain. Still feels like the market can't find buyers here. You know, a great way to find buyers, take prices a little lower. Am I just watching volume and ticks for support or time? Both. Time is the most, most potent support. If the market trades to a level and it spends a lot of time trading there, it's probably a good level to do business, and you can probably trust it to be supportive. So yeah, time is very, very important. But I don't have any one specific thing I look at. I just kind of go by feel. I'm feeling the tempo. I'm feeling the volume. I'm looking at the ticks. What do they seem like they're trying to do? This to me seems like a good trade for a rotation back up to the POC. I'm just not convinced the buyers are here yet. Oh, there they are, starting to poke above that zero line. So yeah, that's the way I think about it. These are the toughest moments and the scariest moments on rotational days. When it seems like you've started a new trend in one direction, you're outside of value in that direction, and you're just grinding away. But I'm still in the internals. I'm still seeing what feels like rotation to me. The breadth and the advancers versus decliners could be the signal I'm missing here because they're trending down so strong. But the ticks feel like it's still just about the same number of buyers and sellers competing over this price range. So suffice to say, this area that the J period is grinding around in, whenever we break out of it, we're probably going to break with a bit of force, one direction or another. My assumption is that we'll be back to the POC. You got it, design knob. 100%. Great question, Andy. No, never ever wait for the breadth or the advancers versus decliners, these top two. They are always late to the party. The market will first push back up, and then 15 minutes or 30 minutes later, they'll start to turn green. The ticks are immediate. These are happening like in real time. So they're more of the fast signal. At this point, I'm more trusting the market structure more so than the internals. It just feels like if there were a bunch of sellers trying to take this price lower, they've had an opportunity here and they're not doing it. So probably this volume that's building here is more buyers than sellers. But I could be wrong. I mean, I am going against the internals. Yeah, Donkey, great observation, you know. But then again, let's talk markets. To me, the candlesticks on the NQ here look rotational as hell. But you're right, this does look like a trend down. And like it's just waiting to get to that low so it can break hard to the downside. That is what those candlesticks look like. And that is perhaps the message in the fact that we couldn't get back above that 20 moving average despite 1, 2, 3, 4, 5, 6 attempts. But right now, we're still in that range of rotation. Well, Donkey, a wise man in the chat recently reminded us that that 20 is semi-permeable. What do you think, Aaron? Are you getting any insights from combining those 2 days into one profile? Yeah, Jonathan Slade's still with us. He mentioned earlier today that he is trying to pay less attention to the chat and focus a little more on his own trades, but he's still listening. You can say hello. Aaron, yeah, very cool. I never combine the profiles, but if you're finding some insights in it, that's awesome. No reason to apologize for the rant. That's what the chat is for. There he is. Slade, I think we all just miss your permabull sort of energy. You know, when you would come in here and be like, it's the end of the world. They're all going to die. Blood in the streets. We really miss those moments, you know? All right, so I'm going to go ahead and move my stop above break even here on my long trade as we're getting up to the upper ends of where we've run out of buyers earlier in the day here in the ticks. So I'm just going to move that stop up. If we get pulled back down again, I'll get taken out and I'll look to enter once we repair the K period low. Otherwise, I will hold until we get back to the POC here at 41.95. All right, so the NASDAQ is starting to push up against its 20 moving average. Is it able to push through this time? I'm long from 41.86. I didn't actually call my entry. I just know I was telling other people that in a nudge, nudge, wink, wink way they might want to enter. So I was just letting them know I moved my stop up. Because if we don't get the rally here, we're probably not going to, right? It's probably going to pull back down to repair the week K period low. So I'm just stopped above break even. All right, just got stopped out of my long trade. So now what I'm looking for is if the market works its way back down below value again, where does it find support? My thought is it probably needs to come repair this week K low first, and then we push back up. So I'll be looking for support somewhere around there. If we don't get it, I'll be ready to go short when we break the E period low. There's the Slade we remember. All caps, baby. Um, so Mackie Mac, yeah, the market profile, it works on any financial asset whatsoever. You could trade it on stocks, bonds, futures, commodities, anything you want. As far as specifically the S&P 500, they all pretty much move together. I mean, literally the ES and the MES, the micros and the minis, they move exactly together. But all the ES markets kind of move in tandem. So the SPX and the SPY as well, they all kind of move together. They might have slight little fluctuations here and there where they're a little different, but the algorithms, the arbitrage algorithms, keep them pretty much in sync. Jack, I don't know if you're asking this as a joke or for real. If it's for real, it's a fair question. Yeah, going short means you're selling, and going long means you're buying. Welcome, Shawnee. Thanks for the sub. Also, looks like I missed one earlier. Vlad, thank you to you for the sub. Welcome to the community. Oh my God, John. Yeah, there's no movie better designed to confuse the shit out of people than The Big Short. Uh, People watch that movie and then they think they're supposed to be like diving into financials and like, you know, trying to find trades that way. All right, tempo's picking up a little bit. Feels like we could be setting up for a little liquidation here. They're starting to panic. Wait, is Mr. Valentine, is that from Wall Street? Did I miss a Wall Street quote? Oh boy. Oh, I'm not familiar with trading places. I don't know what that is. I'll have to Google it on up. Got it. You had me at boob shot. Geez Louise, you look away for 1 second and your short gets super profitable. Okay, so the market is trading back down towards the low. We created another poor low here in the L period. Okay, that increases the odds that the market needs to push down and get at least 2 ticks below it. We could view that as a potential breakout to the downside, which would be shortable. Okay, right up against that low. Remember that a poor low normally gets a push away first, where it goes counter to it. When it doesn't, as it didn't here, and it immediately repairs like that, it's often a sign the market wants to move in that direction. So I do now feel like we might have some selling ahead of us. Okay, so I'm going to use this high from 513 as a potential support here. Also looking at this little random node of volume from yesterday just above that level at 41.79. Could find support in there. And then if not, around the low of yesterday, where we have this node of volume from Friday. The Bulls are back in town. The Bulls are back in town. There they go. So the volume that was building down here, probably more bullish. As the market it's working its way up to new highs in the ticks, which shows some support here. I mean, the truth of it is this was their moment, right? If the sellers were going to take over the market and pull us to all new crazy lows, this L period was their chance. They missed it. So now the bulls give another attempt at the push higher. And the day remains rotational. Bam, 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 bam. So back to the POC. Yeah, I mean, it's a little bit early here in this move. You know, the trend is still clearly down. But yeah, it looks like the market wants to rotate back to that POC. You know me. We do print the M period in 8 minutes, and we all know that M period can be tricky. So there it goes. So yeah, once the M period prints, we'll have to wait and see how that reacts. But it does feel like it's just regular rotation, and this just happened to be another rotation lower. I'm so sorry, Stanley. That was not meant to be a FOMO signal. It was meant to be a the sell-off is over signal. But if you're patient, you'll probably get yourself back up to that POC. Okay, so the 10,000th test of the 20 moving average here on the NASDAQ. Let's see if we can poke through this time. Can it turn back bearish without hitting the POC? So I would phrase that question slightly differently. Does it have to rotate back to the POC, or can we get another push lower from here? And the answer is yes. We can definitely get another push lower from here. It just, as I said, it just seems less likely, less probable in my mind, because we didn't once we broke the low, right? I'm constantly asking myself the question, what is the market trying to do, and how good of a job is it doing? Clearly, from pretty much the G period, right? The market's been trying to push the prices lower. They got all the way down below the day's low, and still they couldn't get anything for it. So they're trying to push the market lower, but they're not doing a very good job of it. If they're going to fail, what's the most likely thing? The rotation back to the POC. Okay, so once again, we cheated by pulling the POC lower, but we did get the rotation back to the POC. But yeah, so that's the way. This was what changed my mind to go from bearish back to neutral, was the fact that they had a chance to push it lower and they couldn't. They failed. So if they fail, if the sellers fail, what's going to happen? The buyers are going to take a stab. Okay, we did poke through that 20 moving average on the NDX. Let's see if we can get through it on the ES. And remember, every time we rotate back to the POC on a rotational day, it can go either way from there. So it pushing back to the POC and then pulling down again, perfectly normal rotational behavior. By the way, earlier somebody asked me about the weak F period. I mean, the weak G period. Is the F period also weak? I forgot to respond to that. So the G period here is weak because it's at the same level as the F period, but the F period was not weak. Okay, it was a good high at the time that it was printed because it was at least 2 ticks away from the D. So the F is good, but the G is weak. And you'll see it's the same thing here, right? The L is weak because it's 1 tick from the K. Oh, the K was weak as well because it was 1 tick from the F. Nope, 2 ticks. 1, 2. Yeah, so the K was a good high, but now the L is weak because it's 1 tick from the K. TV, interesting idea. Let's zoom out and take a look. So you're talking about this balancing area here. You see yesterday as a look above that was going to pull back into it and be a look above and fail today. That is possible. I don't see it that way. I just, again, as I've been saying all day long, I just think it's balance to absorb the excess from the push higher yesterday, which was the breakout of this balance. So the thought would be if the market were to trade down to the highs of this area, which is right where I have this support question mark level, if it trades back down to there, yeah, if you get into it, you're probably going to rotate to the opposite end of the range. But why wouldn't we find support there since we already tested it and broke out, right? We looked above here on Friday. Friday we looked above, pulled back down into the range, then the overnight pushed us back through again. So essentially yesterday should have pulled us back into the range if it was going to fail, but it didn't. So finding support is bullish. It's just how I see it. That's the M period. Lady M. So hit me in the chat with your predictions. Where are we going to end the day today? Is the M period going to push us down to all new lows, bringing in the bears? Or are we going to rotate back up to that POC? It's just above us with a weak reference at 41.90. Or are we heading to repair all the weak references and get above value today? Get back into yesterday's value area. Hit me with your predictions in the chat. Don't tease me, Ampico. I'm only seeing 99 likes. Got me all excited. Trade futures is seeing 4,200, seeing a push higher above value. Design knob, 41.7725. So he's seeing a pullback a little lower. Element sees the bears coming. Ampico rotate back to the POC, so just a little bit higher above us here. Gianfranco, 4,200. Arcalion, 4,201. I love how you come in with these specific numbers every time. Oh, that's great. Not 4,200, 4,201. Beautiful. NOR, auto trading at 41.94. Okay, a little push higher, trying to repair the weak HNI. Ashik sees the murder bot taking us to 41.75. So he sees that murder bot pulling us lower. Donkey sees us closing at 73, also sees a pull lower. Alex at 94. Josue at 95. Dr. Vijay at the POC. Aaron's at 41.85, seeing us kind of float around the same area. Well, so far they're pushing down. Will they find support? Stay tuned. Arcalion just really clarifying the exact number that we're going to close on. Really appreciate that. Andy seeing a push back to that POC around 91. And it's around 92. Aaron 93. Look at that. 91, 92, and 93. Did you guys coordinate that? You guys are like on the phone with each other. Are you ready to comment? Here we go. Okay, push. Comment. John's feeling confident he's ready for this murder bot no matter what it does. Yeah, it's the same person. They don't have to coordinate. They just use all three accounts. Crapping the shower. Is that an expression? Do people do that? I don't think that's a thing. No, we're not quite ready for the murder bot. The murder bot comes in. This is just normal M period, sort of volatility. You get that murder bot in the last 10 minutes where it just out of nowhere starts to move super quickly. The tempo picks up instantly. That is the murder bot. Paul's done for the day, but he sees 70. Pull lower. PewDiePie shit in his shower. Great. Okay, these poo jokes are going too far. Cutting it off here. Soon as we start getting into waffle stomps, we're done. 105 likes. That might be the record. That could be. Thank you guys. What a great stream today. I would agree with that, Slade. That low of the day is doing an awful lot of heavy lifting at this point, and it does have bad taper. But that's where the support stepped in. That's where, if you remember, we had that like super fast tempo drop, and then we just grinded, and then we broke out of that little grind session to the upside. So there is some support sitting in here. Probably not enough for the murder bot, though. 12 minutes to murder bot. Alex. Yeah, I mean, that's the way they're going to have to play this. If they want to increase rates now, they got to do it so gently. They really do have to be like, we haven't made any decisions, but we're talking about making decisions. We're thinking about we might schedule a time in the future to talk about making decisions. Yeah, they got to very gently push that on the market. Oh, yeah, Stanley? Getting them itchy fingers? Which way are you itching? Are you expecting that murder bot to take us higher or lower? Jonathan, us calling it the murder algo, that's a joke. That's just amongst us, but it is a real thing. There really is a wave of volatility that comes in the last 10 minutes of the day. And I had never noticed it until somebody in the chat pointed out that it triggers like the moment that you reach 12:50 or East Coast time, I guess, 3:50. Right at that moment, the volatility just flies in. So obviously we figured out there's some computers that are programmed to start doing whatever they're supposed to do. Probably a lot of it is repositioning, right? People that manage ETFs and stuff like that, they have to reposition the underlying shares and all those sorts of things. So that's probably what's getting triggered in the last 10 minutes. But it really amazed me once somebody pointed it out that it happens every day. The bot doesn't necessarily take the market anywhere, but the tempo does instantly change. Yeah, Stanley, we could call it something nice and polite like the market maker, or we could call it a murderer because of all the times it's tricked us. How many times have you been stopped out on a great trade in the last 5 minutes of the day? Malcolm, I think you might be misunderstanding that conceptual idea. You can't trade the markets without contributing to the volume. It's literally impossible. They can do exchanges off the market, over the counter. They can do exchanges that way. But if they're buying and selling something in the real market, the volume has to show up in the real market. Yeah, Malcolm, what you're talking about, that's called over-the-counter trading. And but them reporting that they did trades doesn't have any effect on the volume in the market at that moment. So let's say they reported that they bought, a bunch of shares of Apple or whatever. It's not like instantly the moment they report it, Apple gets a bunch of buying that happens in it. The buying's already been done. It's priced in. And it was just done off the market. It wasn't done in the open market. So that shouldn't affect the volume or volatility in the open market, other than maybe affecting people's opinions, right? If somebody could somehow get access to those reports instantly at the end of every day and choose to buy or sell based on that, that could be an argument. But the actual volume and volatility you're seeing on the market is real trading taking place at that moment in the market. Okay, 5 minutes to Murderbot. If you have any good book recommendations on dark pools, I'd love to hear them. That sort of stuff fascinates me. The Stock Whisperer. Yeah, I'll check it out. TheDarkPools.com. Yeah, she must be an expert on it. Ooh, she's posting about Ripple. Two minutes to Murderbot. Design knob on the Russian roulette idea. It seems like John already has a plan for that. You're no fun, Slade. Of course we can debate it. We can debate it till the cows come home. I think it's aliens. What do you think? That's right, Alex. You know me. I always make the assumption on a rotational day that we're going to end in wherever the largest node of volume was for that day, which is normally the POC. But today, my guess is either somewhere around the 4180, looks like 87, 88 level here, or up here around the 4197 level. It seems like it's far away, but you get that volatility at the very end of the day, you get the push. So let's see what happens. They're driving down the ticks here. That's it. Cue the murder bot. Daniel, no, I almost never trade the M period. I've just been burned too many times. I always think I'm so smart, and I think I'm gonna figure it out. I'm gonna know what it's gonna do today, and then I just get destroyed. So I step by and let the other traders do it. All right, well, the murder bot's taking us lower. How low can she go? Oh, give it a minute, John. Okay, so we're finding support in this node of volume from yesterday. Can that hold? It's good taper on the low, but I don't like the 27 contracts. I'd rather that was 100, but it is good taper. Okay, so the murder bot, like the whole rest of the day today, is just making us feel bearish while just absorbing the excess from yesterday. This is all just part of the rotation to absorb these single prints we left behind yesterday. Also, another great, I didn't make the call this morning, but it would have been another great look above and fail of the previous day's range, right? You look above the previous day, you pull back in, you're likely to rotate to the opposite end, which for us yesterday was actually just the base of the single prints here because of the double distribution. So it was a perfect look above and fail today. And even this M period pullback is really just absorbing the excess from yesterday. So as long as nothing happens here in the last 4 minutes, if this remains our low, I see that as being bullish moving forward, increasing the odds that tomorrow we either just rotate more or we start to push our way higher. Jason, thank you, brother, for the $5. I appreciate you. $5 for the last 5 minutes of the day. Ding, ding, ding. Thank you, Philip. Appreciate you. And thank you to all the pirates out there. All 106 of you that, or 101 of you that stuck with me to the very end. I love and appreciate you, and I look forward to seeing you all here tomorrow morning. Thanks a lot, guys. Bye-bye.